Welcome to my course. In this section, we'll be covering the different types of candles that form, their key features, and how they form. Now, let's talk about a bullish expansion candle. How does a bullish expansion candle form? Well, ideally, this candle opens low, prints a reversal from a key level, and expands away, closing near the highs. A negative condition is when this candle opens and creates a significant high first, as there's not enough time in the candle to then create a low and expect expansion. How do bearish expansion candles form? Ideally, the candle opens high first, puts in a reversal from a key level, and expands away, closing near the lows. A negative condition is when the candle opens and creates a significant low first, as there's not enough time in the candle to create a high and expand away. Here is an example of expansion candles. Expansion candles usually have small opposing runs or wicks, which allows the candle to expand and close near the highs. This is a positive condition as it supports expansion and can be used as a high probability filter for identifying expansion opportunities. Here are examples of reversal or indecision candles. These candles typically have large wicks, right? And small bodies that close near the opening price. This is because the opposing run doesn't support expansion. This is a candle that we do not want to participate within. We can use this as a filter for avoiding low probability conditions. Here we also see a reversal or indecision candle. The way this candle forms is different and can be traded following a specific protocol that you will learn later on in the course. True expansion occurs when all time frames are aligned in one direction. The goal of this section is to show you the process I use to achieve this. Once a key level is hit and the anticipated high of day or low of day is formed, aim to align multiple time frame expansion candles in the same direction. If the candle you're trading within does not support expansion, simply wait for the next candle's open to confirm expansion candle alignment. Now here is an example of multiple time frames trading in the same direction. Now all we ask ourselves, does the low of the day form from a key level? Yes, this swing low. Now we ask ourselves, does the daily expansion candle support expansion? Yes, right? We have this small opposing run. Then we go to the next largest time frame, which is the 4-hour. So does this 4-hour candle support expansion away from these hourly opposing candles? No, right? So this is when we simply wait for the next 4-hour open to align itself. We confirm it with a lower time frame reversal, and then we trade hourly expansion candles within a 4-hour expansion candle in the daily expansion candle, aligning 3 time frames in one direction. The goal of this section is to show how I align a lower time frame model with a higher time frame expansion candle. If the current higher time frame candle does not support expansion, wait for the next higher time frame candle to open and confirm expansion. Once the higher time frame candle is aligned, price is more likely to move away from the key level. Here, we have a lower time frame hourly internal to external move, supported by a higher time frame 4-hour expansion candle. Here, we have a lower time frame 1-hour or 4-hour external to internal move, supported by a higher time frame bearish daily expansion candle. Here we have a lower time frame daily range high purge, reversal, and expansion into the opposing side of the range, supported by a higher time frame weekly or monthly expansion candle. These are the various reversal formations I look for on the daily and 4-hour time frame. I look for 4-hour swing formations to form from 1-hour or 4-hour key levels to create the high of day or low of day. Then I trade 4-hour expansion candles away from the high of day or low of day, as my goal is to align expansion candles in the same direction. Within this reversal type, we see candle 1 hits a key level, candle 2 reverses off the previous candle's low, and forms a reversal visibly shown by the higher time frame candle closure. As we see, this candle 2 fails to close below candle 1's low, which is a reversal signature. We do not look to trade within this candle, as our goal is to trade within expansion candles. This opposing run is a negative condition because it does not support expansion. We simply wait for candle 3 to open to align ourselves with expansion. Within this reversal type, candle 1 will hit a key level, candle 2 will reverse off the previous candle's high or low and expand away, which is supported by the opposing run size. We do not have to wait for this candle 2 closure as it supports expansion. We can trade within this candle using lower time frame reversal confirmation. Within this reversal type, candle 2 will hit a key level, but does not close a reversal candle, which is visibly shown by the higher time frame candle closure. As you see, this candle 2 cannot close back within candle 1's range, but on the lower time frame, we may have a reversal. If there is no reversal in candle 2, candle 3 will confirm reversal and expand away without taking out candle 2's high or low. Here is an example of a reversal into expansion candle. This will be a 4-hour or daily chart, as this is the only time we look for reversal into expansion candles. Here we have an expansion candle closure within a key level. Candle 2 forms a small opposing run reversing off of candle 1's low. This small wick supports reversal into expansion within the same candle. Within a bullish London reversal, ideally the daily candle opens low first, creating a small opposing run or wick, as this supports a bullish daily expansion candle. Ideally, the previous session Asia either consolidates or retraces, as this is a continuation signature because the market does not reverse from a consolidation or retracement. We want London to engage a 1-hour or higher PD array within the hours of 2 a.m. to 5 a.m. to form the daily low, to then expand away within a 2 a.m. 4-hour expansion candle. Now we'll be going over New York continuation. In a New York continuation between the hours of 8 a.m. and 10 a.m., we will trade within the 6 a.m. 4-hour expansion candle, moving away from the low of the day that was created in the previous sessions. Entries will be paired with the volatility drivers to support continuation towards open objectives. In a New York continuation between the hours of 10 a.m. and 12 p.m., we will trade within the 10 a.m. 4-hour expansion candle, moving away from the low of day that was created in the previous sessions, trading towards open objectives. Here is an example of a 10 a.m. continuation where the daily profile is a London reversal. And here is a 10 a.m. continuation where the daily profile is a New York reversal. In a 6 a.m. 4-hour New York reversal, we will be trading within the hours of 8 a.m. to 10 a.m., pairing reversal and continuation signatures with drivers away from 1-hour and 4-hour key levels that form the high of day or low of day. In order to participate within a 6 a.m. 4-hour New York reversal, the 6 a.m. 4-hour candle must support expansion. If not, we simply wait for 10 a.m. to open to see continuation and align expansion. In a 10 a.m. 4-hour New York reversal, we will be trading within the hours of 10 a.m. to 12 p.m., trading away from 1-hour or 4-hour key levels that form the high of day or low of day. In order to participate within the 10 a.m. 4-hour New York reversal, the 10 a.m. 4-hour candle must support expansion. If not, we simply skip the day. Here, I'll be demonstrating how I profile the 4-hour chart using 4-hour swing points from key levels that define the high of day and low of day. I trade 4-hour expansion candles away from the high of day and low of day. These examples focus on 4-hour key levels, but it's important to remember that daily reversals can be formed from 1-hour key levels with the same reversal formations. Now, here is an example of a London reversal visualized on the 4-hour chart from 4-hour key levels. Now, it's important for every single reversal profile that we use is the candle that you're trading within is always going to be a reversal into expansion candle. This is what makes it valid to actually trade because it supports expansion, right? If this candle doesn't support expansion, we just seek the next candle for continuation. Now here we see candle 1 being Asia session, hits this fair value gap, we print a reversal off of candle 1's low, supported by the small wick which allows the candle to expand. Here we see the same thing where we have a swing point, Asia session hits this low, and we reverse off the previous candle's low. Here is an example of a 4-hour opposing candle where Asia session hits this candle. Now, again, it will always be a reversal into expansion candle, as this can't be a London reversal if London isn't creating the low of the day. Here is an example of a 6 a.m. New York continuation where London puts the low of the day in from a 4-hour key level. So as you see, we obviously have a reversal visible by the candle closure on the higher time frame. So this is very obviously a continuation that we will be seeking within the 6 a.m. candle. Here we have a swing point low again, obvious reversal within the London session. So we will be seeking near continuation, right, with that small opposing run on all these examples, right, supporting expansion for continuation. Here is an example where London hits a key level but doesn't reverse, right? This closure doesn't represent a reversal. So you will either have a lower time frame reversal within this candle, or early on within this candle, it will confirm a reversal, right? You'll have that small opposing run supporting expansion to open objectives. Here is a 6 a.m. reversal. So just like London reversal, you have to take out the previous candle's low, right? So here is a fair value gap where London candle 1 hits this low, we reverse off of the candle's low, small opposing run that supports reversal into expansion towards session highs, right? The way this daily candle opens, low first, supports a daily bullish candle. Here we have equal lows where the previous sessions don't do anything, and candle 2 is the one that prints the reversal and hits the key level, right? You have that small opposing run, right, that supports reversal into expansion. That's exactly what we want to see. Here we see again, 2 a.m. doesn't print a reversal, but it does hit the key level. Here, there's no reversal on the lower time frames, so we see candle 1's low as a reversal, supported by that small opposing run, which supports expansion. Here is a 10 a.m. New York reversal example. Over here, we have a New York reversal where candle 1 hits this fair value gap. Again, the candle closure doesn't represent a reversal, so on the lower time frame, we will either have a reversal, and then we have a 10 a.m. continuation, or 10 a.m. will confirm the reversal, supported by this small opposing run, right, for continuation. Here, you have another New York reversal, obvious reversal, shown by this closure, right? So we just need to have this small opposing run to align with the continuation and expansion, right? So over here, we have a London reversal from an opposing candle on the 4-hour chart. 6 a.m. and 10 a.m. continuation, right? We have a swing point formed. So candle 4 continuation supported by that small opposing run. So here is 10 a.m. reversal, the last profile. Here we see the previous 2 sessions do not create a reversal. Here we have 6 a.m. candle hitting a key level, and 10 a.m. reversing off of candle 1's low. Again, reversal into expansion candle supported by this small wick. If this doesn't have a small wick and we don't reverse in 10 a.m., it doesn't support expansion, we do not trade this day. Here we are reversing off of a 4-hour swing point low. 6 a.m. candle hits this key level. 10 a.m. candle reverses off the low, supports expansion with a small wick. Here we see the previous sessions retrace into this opposing candle. And again, we reverse with a small wick off of candle 1's low, supporting expansion. So let's get into my ideal profile. The ideal profile is when the low of day or daily wick is formed from manipulation on the hourly or 4-hour chart, ideally paired with an SMT, which forms a protected swing intra-candle for the market to expand away from, creating the body of the candle. The manipulation will be supported by the daily and 4-hour small opposing run, which supports expansion away from the manipulation. Now let's pair a manipulation with the profile. Here is a London reversal where we see Asia consolidates, creating a 1-hour or 4-hour range or swing point to reverse from. London session manipulates into this level, reversing the daily candle, ideally paired with SMT. We will be trading the 2 a.m. 4-hour expansion candle away from this manipulation. Here is a New York reversal where the previous sessions open low, consolidating or retracing, creating a 1-hour or 4-hour range or swing point to reverse from. New York will manipulate into this level, using it to reverse the daily candle paired with SMT and a driver. We will be trading the 6 a.m. or 10 a.m. 4-hour expansion candle away from this manipulation. Here we are going to be going over the specific protocol to trading reversal candles that must be followed. So how does a reversal candle form, specifically a bullish reversal candle in this example? Well, the candle must open low first, right? Creating the high of the day early on in the candle, leaving enough time in the day to expand back within the range. Let's talk about targets. So we know that this candle is not likely to close with a large body, so we must adjust to that. We know it's likely to either close, maybe slightly above the daily open or maybe below the open, creating that small body. So you have to either target back within the daily range in the form of session highs or at the current day high in the form of session highs, right? This here is leaving behind low resistance liquidity, so it's more likely for price to actually expand towards these objectives, right? Now here, the low of the day must be formed from an hourly or 4-hour key level, and the low of the day must be formed prior to 10 a.m., leaving enough time in the candle to expand back within the range or back within the current day's high. Here we pair the reversal with SMT or a driver for higher confluence. Over here we see this is exactly how we expect the daily candle to form. We do not expect much expansion past the daily open as the wick size does not support it. Now to trade a reversal candle, we're going to be trading expansion candle back to the daily open or back within the candle's range from 1-hour or 4-hour key levels. So now let's talk about targets and how I position myself within price. So here is an example of aligning a lower time frame model in drawn liquidity with a higher time frame drawn liquidity. Now, it is best and ideal to position yourself within and before we take out the hourly draw, right? So here we take out a range low, we manipulate it, so we're expecting expansion into this range high. So it is ideal that you get in before we take out this hourly draw, and then you can hold runners to the daily drawn liquidity, right? So the reason why we don't enter after we take out these objectives is because we do not want to get caught in a new phase of price such as consolidation or retracement, because those are not favorable conditions, right? So as you see here, we expand into this hourly drawn liquidity. If we want to re-enter the market for continuation, we're simply going to wait for an hourly or 4-hour key level or model to be engaged for continuation, right? So here we see we run out this short-term low and discount of this range. Here we have an ideal swing formation, so ideally I want to be involved before we take out this hourly draw and hold runners into the higher time frame drawn liquidity. In a bullish candle, the market opens low, forms a low from a key level, leaving session highs behind as target. The ideal position is below the daily open, to be positioned within the daily wick. When the market trades into a key level, session highs should be available to targets. This increases the probability of the daily candle expanding, as there is no protected high to trade away from, making it the targets. So as you see, the candle opens low, leaving behind session highs or low resistance liquidity in the form of consolidation or retracement. As mentioned previously in the course, This is a continuation signature. The market does not reverse from consolidation or retracement. So when the candle opens low, this already supports a bullish daily candle. So when we create a reversal from a key level paired with SMT and a driver, this heightens the probability significantly. Now let's go over the three models that I use. In this example, we're going to be going over internal to external, internal being the reversal point, external being the target. Here is an external to internal, external being the reversal point, internal being the target. Here is an example of high resistance to low resistance or order pairing ranges, where we take out a range low or a swing low, reverse or manipulate and expand into the opposing side of the range or target failure swings. Talk about the continuation entry sequence. This simply means the previous 4-hour candle hit a key level to form the low of day or high of day and created a lower time frame reversal confirmed by an hourly or 30-minute T-Trades fractal model. The new 4-hour candle will open up within an already existing T-Trades fractal model and expand away from the key level for continuation. Now, this will often happen within the 6 a.m. and 10 a.m. New York continuation, as the previous candles has already hit a key level and reversed, forming the higher low of the day. Let's go with this example of a New York reversal where 6 a.m. forms the low of the day. 10 a.m. will open up with an already existing fractal model that the 6 a.m. candle printed, or we can do it like this. 2 a.m. forms the low of the day, forms a lower time frame reversal, and 6 a.m. opens up within an already existing fractal model for continuation. Now let's talk about the reversal entry sequence. This simply means the current 4-hour candle's higher low is formed from a 30-minute or hourly T-Trades fractal model that reverses from a key level. This reversal sequence can be used to frame 4-hour reversal into expansion candles or continuation expansion candles. So what we have here is a reversal into expansion candle. We can imagine this being a London reversal or 6 a.m. New York reversal or 10 a.m. New York reversal. And the low of the day is formed from a key level. The low of the 4-hour is formed from an hourly and a 30-minute T-Trades fractal model. Here, we can imagine this as a continuation entry, a 6 a.m. New York continuation, or a 10 a.m. New York continuation, where the low of the 4-hour candle is created and confirmed by a lower time frame 30-minute or 1-hour T-Trades fractal model. Now let's talk about the aligned entry sequence. This simply means that the current 4-hour candle has already aligned itself with expansion. The lower time frame T-Trades fractal model is used for continuation to realign expansion candles in the same direction. So as we see here, this is the 30-minute chart. We see that the current 4-hour candle is already expanded, already supported by this small opposing run. So we're just waiting for a key level for continuation. As we see, these two candles are not aligned bullishly. So what we're going to wait for is a valid fractal model to align ourselves with expansion. Here we get a valid C2 closure within a key level. So now we're just waiting for candle 3 to open up to align itself with the 4-hour expansion candle. At this point, we are now aligning expansion candles in the same direction. GXT flowchart. This will help you go from an idea all the way down to entry. So let's start with the idea and walk through the left side of the flowchart. So the idea, daily profile away from a 1-hour, 4-hour key level that forms a higher low today. So all you're going to ask yourself, has a relevant level or reversal point been hit to create the low of day or high of day? If yes, now you're going to ask yourself, does the current daily candle support expansion away from that low of day or key level, right? So if no, then we must have a valid, framework for trading a reversal candle, right? If there isn't, then we skip the day. So let's say there is framework for trading a reversal. Now we go to yes, right? Is the 4-hour expansion candle aligned? If no, then we have to simply wait for a 4-hour open, right? So this is what this shows over here. If you're not aligned with a 4-hour expansion, we simply wait for a new open. Once a new open has occurred, then we go back over here, right? We ask ourselves the same thing. So since it is aligned now, all we need to see is a valid fractal model entry to get on side. Once we have a valid fractal model present, then we can look to trade, right? So let's go back over here. Let's say the daily candle is aligned, right? Then we ask ourselves again, does the 4-hour candle support expansion? If it does not, then we simply wait for open. Let's say we waited for open. Okay, now we're back here. Now we just need a fractal model entry, right, to align ourselves with the 4-hour candle. Once we have that, then we are good to trade, right? So let's say when we hop on the charts, a key level hasn't been hit or a reversal hasn't occurred from a relevant level, right? This is no, right? So we must wait for a key level to be reached. If a key level does not, get reached, or we don't reverse from a key level, then we simply skip the day, right? So let's say a key level has been hit. We're simply going to ask ourselves, does the current 4-hour candle that we're trading within support expansion? If no, we're going to wait for the open. Okay, we wait for the open. We come back to here. Is there a valid fractal model to trade away from aligned with the 4-hour expansion candle? If yes, then we can look for entries. All right, so let's get into it, baby. So we'll start with open, high, low, close. This is the first section. Get the notes here. So this just talks about the different types
Yo,
of.
real quick,
Yeah,
hit the little people icon at the top of the screen.
there we go.
Oh wow, that doesn't even help.
That
Yo,
actually,
WAP sucks with the UI. All right,
this
maybe
is
put
the
it
first
back.
problem.
Actually, put it back. It actually looks better the other
Yeah.
way. That sucks. All right, see ya.
Okay. Yeah. So this section just talks about the different types of candles that form in the market, which ones we want to engage, which ones we want to avoid. So let's talk about how a expansion candle, bullish expansion candle forms. So generally, what we want to see is this candle open low first, right? Expand away and then close near the high. Now, the reason why we want to see this candle open low first is because we want as little time in the manipulation phase of the candle so that there is more time to actually expand, right? We want no wasted movement in the manipulation phase, really. So that's a bullish expansion candle. Here's a bearish expansion candle. This applies to all time frames, what we're showing here. Um, so here's at a positive condition. This is what you want to see to really confirm that you're on side with an expansion candle. And that's going to be the opposing run, right? So with a bullish candle, you're going to look at the bottom wick, right? You want that to have that small wick supporting expansion. With a bearish expansion candle, it's going to be the top wick, right? Pretty easy. So what we want to typically avoid, right, is these reversal candles. So even if this is a bullish candle, right, with this large wick, it's less likely to close near the highs, right? So when you're looking for continuation way up here, right, this is a negative condition, right? Because first off, this daily candle is, you know, exhausted, right? And we have that large wick, which typically these candles don't close near the highs, right? You want to avoid that. Now, there is a way that we trade these candles, but that will be, we'll go over that later in the course. So, what about a reversal candle where we open low first, right? Create the low and they trade back in the range. Now, these are the candles that we don't typically want to trade, but there is a way to trade them. This is very different than this candle, right? Because this candle might open high first or whatever like that. This candle here, we want to see it open low first, right? And you have to adjust your targets, which we're going to go over later. But typically, right, you want to trade back to the open. And with this large wick, it's not likely to expand way up here in the range, right? It's more likely to fall back and close near the opening price, right? So that's just going over candles. And again, we look to trade expansion candles. So let's go into the next lesson, which is expansion alignment. This is what my whole model is framed around, right? So these are the candles that I really look for, right? This can be the 30-minute as well. But I typically like to align the daily, the 4-hour, the 1 hour, or the 30-minute in the same direction away from
the same key level and do the same draw, right? So this is what's going to look like. Let me just make sure I'm good here. We're good. All right. Let's say we have a daily reversal, right? Which creates the wick, right? What are we going to wait for? We're going to wait for 4-hour expansion to align itself, right? So we want to be looking for longs within this 4-hour candle. Why? Because it doesn't support expansion, right? Look how far the wick is from the open, right? For this to be you know, it can't be an expansion candle, right? Because even if it switched bullish, right, what would it have? That long wick, which we don't look to trade, right? That expansion is more likely to occur in that next candle opening, right? So you just want to wait for that to align itself. And obviously, this manipulation here, what is it creating? Right, that small wick supporting expansion in the daily candle. Let's move lower. So this is just aligning expansion candles with models, right? So if you want to trade an internal to external model, right? Let's say this is the 4-hour time frame. We're not going to trade this candle that hits the key level. We're going to look for the next candle to trade and trade expansion candle away from that key level, right? So we're waiting for expansion to align with these key levels, right? We're going to trade expansion candles away from them, right? What about this high? So external to internal. Not going to look within this candle. We're going to start to pay attention to the following candles after that, right? So here we would look to trade these candles back into the range. And here we have the daily candle also supporting that, right? So the previous day took out this high, the new day opens, and we see it make the run, the key level, right? What about this? Again, can be used on any time frame. So here's a daily chart, runs out this low resistance, right? Failure swings. What do we see? The monthly or the weekly candle is supporting that um, right, that move to these lows, right? And I'm going to show you guys some examples of all this stuff later after we do this quick overview, right? So reversal types. So there's 3 ways I look to trade reversal candles. So the first one is obviously, we all know this one, right? Next day model or C2 closure. We fail to close over candle 1. We look to trade candle 3 away from that reversal, right? So this is something that's a little bit new to you guys. This is a candle 2 reversal into expansion, right? So what are the 2 ways a reversal candle could form, right? Well, it's the one I showed you earlier, the negative condition where we have that long wick, right? Where we typically want to avoid. What about the reversal candles that have the small wick, right? What does that indicate, right? Expansion. So it's a 2-stage, like it reverses and expands in the same candle, right? With that small wick. So this is when, let's say, candle 1 hits a key level. We look to trade the next candle aligning ourselves with expansion. As long as we have that small wick that runs out candle 1's low, we can actually trade this, right? And I look to trade these candle 2 reversal into expansions on the 4-hour time frame and the daily time frame. So what about this? You're going to see this a lot. Now, this is when candle 1 hits a key level, and let's say it doesn't have that reversal candle. This is typically, again, on the daily and 4-hour time frame. Inside of this candle here, you may have let's say this is a 4-hour time frame. You may have like a 1-hour candle 2 closure, right? So, or like maybe a lower time frame CSD, like 15-minute CSD or something like that. And you'll see just this candle expand. I'm actually going to show you a quick example right here. Um, so like right here, right? We hit this key level or whatever. And it's not even about this closure really. It's just about on the lower time frames, right? We go to like to the 30 minutes. It's just like any profile that you would confirm, right? Let's say you get this close right here. And you have the indices, the opening prices till 9:30 runs out some lows or whatever. And all you're going to ask yourself, are you within an expansion candle, right? So, right, we can trade away from this low. That's really all I'm looking for. I'm looking to trade away from an established low and trade 4-hour expansion candles away from there. So, again, all these reversal types. Well, this one obviously we're going to use on any time frame, right? Because we trade the fractal model, but these 2 reversal sequences are more for like low of the day, high of the day, stuff like that, on the 4-hour time frame. Um, so this is how to trade the candle 2 again. So candle 1 hits the key level, right? How does this candle close? You're gonna ask yourself, how does this candle close, right? Is it a reversal candle where we expect candle 3 to expand and not take out candle 2's low? Or are we going to take out candle 1's low because it's a expansion candle and expand away, right? So here we hit the key level and close a expansion candle, so we frame a reversal off that candle's low. Let me just show you a quick example, right? So here we hit this fair value gap or this swing low. How does this candle close, right?
Yo, your
Yeah.
screen's frozen.
I don't know why it does it. Are we good? Yeah, we're good. Okay, so I'm just showing you an example of a candle 2 reversal into expansion candle. So here we have an expansion, right? What phase of price do we get? Consolidation. We make an open low daily candle, right? And the 2 a.m. candle. How did this candle close, right? An expansion candle. So we're going to revert to this low as a reversal point, right? And we can trade this candle 2, this 4-hour candle 2, um, right, because of this small closing run we see. And we see that the low of this candle is created from what? A fractal model, which is what we're going to get in later. And we see that again over here. This is a London reversal, right? We have Asia consolidations, well, right here, right? We have 2 a.m. taking out the Asia session lows and expanding, right? So it's reversing, it's manipulating, but also it's expanding in the same candle because of that small wick. So where were we at? So yeah, that's how you trade a candle to reversal candle. But we're gonna get into the confirmation of that later on in the course. Um, let's move on. So let's get into profiling the 4-hour chart and profiling the daily candle. So for London reversal, right? Let's say this is the hourly time frame, right? So this is profiling apart from 4-hour key levels, which would be something like this, where I just showed you guys. Something like over here, right? We don't have a key level to the left. I dropped down to the hourly time frame. We do have a key level, right? A swing low. So all this is what we need to be trading, from is 1-hour key levels. That's a must, right? The low of the day must be formed from a 1-hour key level. And you want to trade away from that 1-hour key level, right, within a 4-hour expansion candle. So you see how we were trading away from this hourly sweep. We show you here, right? Inside of a 4-hour expansion candle, right? So see how simple that is? All you're going to ask yourself, right? Let's say it's a fair value gap, right? If we hit this fair value gap, this is the low of the day reversal candidate. All you're going to ask yourself is, are we trading with an expansion candle away from this? If you're not, you're simply going to wait for the next candle to open, right? Sweep out that low, depending on how it closed, and you're just going to trade away from there, right? So if we go back, right? So all this is pretty much Asia session consolidates or whatnot, and then we're going to assume that we're to the key level to the left, and we're just trading in a reversal into expansion candle away from that, right? So so this is London reversal. What about New York continuation? New York continuation is very simple, right? We're trading away from the London low today. We're trading within a 6 a.m. expansion candle, right? So there's two 4-hour expansion or two candles within the New York session, the 6 a.m. candle and the 10 a.m. candle. We're more concerned with the hours of 8 o'clock to 10 o'clock in the 6 a.m. candle because that is where the drivers, right, the red folder news events lie within that time window. So that's what we're going to put our focus on, right? We're not really focused on the hours of 6 a.m. and 7 a.m. Now, if you're a Forex trader, this 6 a.m. candle will open up at 5 a.m. So you can start your session at 7 a.m. But yeah, it's simply just trading away from London session, right? We're all familiar with this, but all we're doing is we have to be within a 6 a.m. expansion candle, right? And this is a 10 a.m. expansion candle, right? Where we're putting in a 2 a.m. low and not only a 6 a.m. expanding, but also 10 a.m. expanding, right? Very simple. Um, what about New York reversal? So the 6 a.m. candle, right? If this is going to be a New York reversal, and let's say the drivers within the 6 a.m. candle. So let's say 8:30 red folder, you know, manipulation or whatnot. You can trade within this candle as long as it's what? An expansion candle. So you see the common theme here? We're just trading within expansion candles. It's very simple, right? And if 6 a.m. puts the low of the day in, as long as there is an objective still available, or the daily range is, not exhausted, right? We can still expect a 10 a.m. continuation, right? So that is 6 a.m. and 10 a.m. continuation. Let's get into New York reversal. Right, so New York reversal, let's say none of the previous sessions do anything. They don't set an high or low of the day. This is when we're going to revert to the 6 a.m. candle to create that reversal and the time drivers within it. So again, here we hit a key level. Maybe 2 a.m. hits a key level, but is yet to expand because again, it's not aligned with expansion. We're going to revert to that next candle to expand away from that key level. What about 10 a.m. reversal? This is when none of the previous candles do anything. Let's say 2 a.m., 6 a.m., they don't really do anything. Maybe they hit a key level. Maybe 6 a.m. hits a key level, but isn't the reverse. So this is where we're going to look for 10 a.m. to reverse, right? We need that small opposing run again, right? So let's get into, so this is the profiles, right? Only two. Let's get into profile in the 4-hour chart. So again, this is when we're going to revert to 4-hour key levels, right? To create the higher low today. And again, we're just showcasing the profiles via 4-hour candles. So a New York reversal would look something like this, right? You have an impulse leg, a fair value gap. So looking for a continuation, right? Where we open low into a key level. Let's say the 2200 4-hour candle. It's a key level, right? We're just trading a reversal off that candle's low, right? Because to have a New York reversal, London must be the low today. So it has to sweep out this candle's low, right? What about an order block? Right? Open low into that order block, right? Same thing. And here's a swing low, right? So the common thing with the 2 a.m. and New York reversal that you guys are going to see that they have to sweep out this low, right? They have to sweep Asia lows. So it must really only be a reversal into expansion candle. So this is why I had to teach you guys this, right? Because it can't be, it could be, right? If you want to trade I didn't put this in the course just for simplicity's sake, but if 2200 handle does hit a key level, so if you're like a Forex trader, and it does hit a key level, then you can expect, London continuation. But I mainly focus on indices, so London or Asia high of the day is not really something that we see too often. So yeah, so let's move on to. Oh wait, whoops. I so here is 6 a.m. continuation. This is simply when 2 a.m. hits a key level. Doesn't matter how the candle, closes. It can close like this. Remember, Um, but it needs to hit a key level, right? We need to be able to trade away from that key level. And to trade a 6 a.m. continuation or New York continuation, we need to have that small opposing run, right? Okay, so very simple, right? So 6 a.m. reversal. So just like 2 a.m. Reversal, we need to trade off that previous candle's low. So this is when the London session, the 4 hours within this candle, right, don't really do anything. Maybe it hits a key level, but it doesn't reverse, so we can't trade away from it. So we must create that reversal off that candle's low, and then we can trade away, right? And again, fair value gap, order block, and a swing low. This is a 10 a.m. continuation where 6 a.m. hits a key level, right? And this can be, right, this is a New York reversal where 6 a.m. hits a key level and then 10 a.m. expands. Um, this is a classic buy day where it's a London reversal. We form a swing point, right, where the 6 a.m. candle starts to trade away, but hasn't yet exhausted the daily range, right? So we can expect a 10 a.m. continuation, right? That's what you want to see. If you're going to trade the 10 a.m. candle, you don't want the daily range to be exhausted. We want to have objectives still open, right? So here we have a we have a 6 a.m. reversal, 10 a.m. continuation, right? So it's all about what candle hits the key level, trading the next candle away from it. It's really as simple as that. Um, Here's the 10 a.m. reversal, right? Where none of the three candles or two candles really do anything, none of the two sessions. So in the New York session, maybe 6 a.m. hits a key level, we have to reverse off that candle's low, right? This is a fair value gap, right? Order block, same thing, right? So yeah, that's really as simple as it gets there. So let's move on to ideal profile. Now this is, if you just stick to this profile, I promise you, you'll have great success. So what is the ideal profile that I look for? It's essentially where we open low and the candle's wick is formed from manipulation. So intra candle, we are trading away from a protected low. So the candle opens low, right? Runs out a short-term low that we can trade away from basically its own low, right? So it creates the wick and we can trade the body, right? So as simple as that. And we look for this on the 1 hour and the 4 hour time frame. So how does that look via profile? So London, Asia lows will generally create like 1 hour swing points, right? So we run the low out and we pair that with an SMT, right? And right, we get our shift. Maybe we get our model that we look for that we're going to learn later. But yeah, this is generally exactly what we want to look for, right? So New York reversal, so be within the 6 a.m. candle, where we run out, let's say London low. So the previous sessions don't really do anything. Maybe they consolidate. We run out that consolidation low, pair that with a driver, so 8:30, 9:30, SMT, right? We expand away from that. So creating the wick, right, from manipulation and expanding away, right? Trading expansion candles away from this. Um, and also, you need to align the manipulation with the wick size of the daily candle, right? You can't have manipulation expansion if you don't have that small wick, right? Because in order to get expansion, right, we need that small wick supporting. So let's go to wick size. So how to trade a reversal candle, right? Very specific, right? Let's get into it, right? This large wick. Right. So one thing that we need to see is Asia must be the high of the day, right? And we must open low first, right? Because we want as little wasted movement as possible, right? What we don't want to see is an open high and then low and then high again. Like that's too much wasted movement. We want to see an open low and then high, right? And the reason why we want Asia session to be high of the day because we want the high of the day to be formed early on in the session, right? Because if we basically create the low of the day as early as possible, right? We have enough time in the day to revisit this high. We can't really create this high in, let's say, like New York session or London session, right? Because there's not enough time in the day to, make the low and then expand back to the highs, right? So we must hit a key level, obviously, right? To trade back into the range. So here is an example of us running out this low in New York session, right? And what are our targets? So in order to trade this day, right, we can't expect a daily expansion candle, right? So we know it's most likely going to close back within its own range or near the daily open. So we must adjust our targets to that. So what we're going to target is either targets back within the daily range. So let's say this candle right below the daily open, or not this candle, but this session high, right? Or maybe Asia session high, so the current day's high, right? Because right, we're not expecting price to expand past the daily open. Um, so it's going to look something like this, right? Now another thing is that should be in here, right? We want to see the low of the day formed before 10 a.m., right? Because like I said, if this low is formed at like 12 p.m., you cannot expect, this random time, like PM session to basically, reverse the daily candle, right? There's not time to do it. So we need enough time to create the low and also expand back into the high of the day, right? And here's a depiction of price, closing with that small body, right? Big wick, small body, closing near the daily open, right? So simply just adjust your target. We must open low first, right? And must target session highs, right? Pretty simple, but and here's what it looked like on the forward time frame. So again, what are we trading back to the daily open? We're trading within 4 hour expansion candles. So we're still aligning expansion candles, but just not the daily, right? we're adjusting our targets. So we're trading, 4-hour expansion candles aligned with 1 hour or 30-minute expansion candles back to the daily open as our targets. And again, must hit a key level. Let's move on. Now for targets. This is very important. And I see a lot of people, this may help a lot of people. So what I like to do, let's say I have a higher time frame draw, right? I'm going to revert to 1 hour and 4-hour models supported by the daily candle. So what does that really mean? Let's say, we want to trade to this draw, right? We hit a key level to the left. Let's maybe a daily fair value gap or whatnot. And say we run out the previous day's low. So let's say the daily open is right here or something. It supports expansion. I'm simply going to I want to get in before we take out these hourly draws, right? Because after we expand into objectives, what phase of price do we get, right? We can get retracement, consolidation, or reversal. We don't really know, right? So when we take out these lows, these key levels, or we hit key levels in the hourly and the 4-hour time frame, we get a new phase of price, right? Which should be expansion. And what do we target in expansion, right? Objectives, right? So I want to get in before we take out even these intermediate time frame models, and then I want to manage my position to these higher time frame draws. So let's say I get in right here, this ideal swing formation. I want to get in before we take out this high, right? But I want to chase price, right? That's where you get chopped up. That's where a lot of people go wrong, right? I want to get in before, right, we take this high out, and I want to manage my position into this high, right? So pretty simple, right? Now, what is intra-candle targets that I call, right? Is again, I want to get in before we expand, right? So before even the daily candle expands, ideally. So what does that mean? Are we open low first, right? And we're creating objectives. We are creating, right, intermediate time frame draws on liquidity, right, via session highs and lows. Um, so what we're doing here, right, trading away from a key level, doesn't matter. This is New York reversal, this is London reversal. And we're targeting these hourly highs, right, which is below the daily open. So we're getting positioned in the wick, right? And we're trading 4-hour expansion candles away from these key levels, right? Um, and here's our draws on liquidities that I look for. These are just models, right? Internal, here's the reversal point, the target, external, pretty simple. Here is external, the reversal point, internal, the target. And here's like, this is basically like external range to external range, or whatever you want to call it, order pairing ranges. You take out one side of the range, target the other side, right? So manipulation, distribution into failure swings. It is my favorite model personally. So I believe that is it. Let's see. Oh no, we have entry type, right? So now let's get into the entry type. How do we actually confirm these 4-hour lows? How do we confirm the high of the day? This is how you confirm everything, right? And how you get onside with entry. So what is continuation? Right, let's say this is the 2 a.m. candle, right? It hits a key level to the left. Well, what is this candle not aligned with? It's not aligned with expansion, so we're going to revert to that next candle, right? How do I confirm that this next candle is going to expand pretty much? Well, within this candle, right, you're going to either have a, a C2 fractal model closure or a C3, right? So that's what a continuation is. It's when the 4-hour candle opens up within an already existing fractal model from or away from a key level, right? So I'll show you some examples of this, but this is continuation, right? This is probably my favorite as well, right? Because, we don't need to see, we don't really need to see the 4-hour candle do anything. It should just expand immediately, right? Because the reversal has already occurred on the lower time frame. So this is when it opens up and just expands, right? But what about reversal? So let's say this is a 2 a.m. candle. So London reversal. This is when the 4-hour low is formed from a lower time frame fractal model, right? So an hourly 30-minute. Pretty simple, right? This can also be a continuation, right? So let's say we're going to trade the next 4-hour candle. So this candle reversed. What about the next candle expansion? This simply means that the low of a candle, so even if it's a continuation, the low is formed from a fractal model, right? Pretty simple. What is aligned? This just means you're trading continuation, right, aligned with a 4-hour expansion candle, right? So this is the low of the candle, right? We expand away. We're getting reaccumulation or redistribution, right, from this fair value gap. And you're already aligned with a 4-hour candle, right? So the fractal model that you're trading within is supported by expansion, right? You're already within expansion. So those are the three types. Let's get into some examples, and then we'll go over some questions. Let's even start with today, or no, this is not today, but I'll show you an example of today. Let's go over EU here, for example, right? So just continued expansion, right? We see the daily wick, right? What does it support? Expansion. What does this wick need to be formed from? A key level, fair value gap on the 4-hour time frame. So are we going to trade within this candle? No, we would trade within this candle, right? So the 1 a.m. candle, is this 4x by the way, is opens right here. So this is the new 4-hour open, right? Is there a fractal model to trade away from this far? No, right? So what do we need to wait for? In this case, it would have to form, right, ideal swing formation, or just a candle 3 closure, right? So we get that candle 3 closure, right? We close a body above this candle, right? Meaning that we can trade the next, or yeah, the next hourly candle, right, to these highs, right? And again, we want to get in before these highs. What is this? If I go back to the course, go to targets, right? This is intra candle targets, and we're ideally getting before getting in the market before these draws are met, right? If I play price here, we just draw out the fractal model here, right? All we need is a body closure above these opposing candles to confirm that C4 wick, right? So there we get it. Again, what's our target above here, right? Right, and you see, you obviously get 2R there. So what about continuation here, right? You have key levels for continuation or opposing candles, right? So this is the, where's the 4-hour open, right? So why would we not trade this 4-hour candle? Does anyone know? Right, because of this large wick, right? The candle open is here. Look at this huge wick, right? We ideally would not trade this, even though it works here, right? But this acts as our filter, right? For to avoid these reversal candles, right? We don't want to be involved in this. In this case, it does work, but a lot of times it does not. Let's go over today's example though. So this is a London reversal. If we go over here, right? This is the 1 o'clock candle, right? This is the London session as well. And what we see here, if I go on GU real quick, so here we have a swing formation. If I go on the correlated asset, we actually take out this external range high. Right, so that is a divergence, right, with the previous high. So just given that alone, we can start to look short, right? And what did the previous, if you want to trade a London reversal, we must reverse off of 2100 candles high. This is what we do. We have that small wick. What is the high of the candle formed from, right? Reversal candle, right? If I go back to reversal, not reversal, but the entries type, right? The high, in this case, we're trading a bearish expansion candle 4-hour. The high is formed from a fractal model, right? So this is our alignment, right? We have SMT up here. This is our key level, right? Because the correlated asset actually took out this high. And just the signature and price of expansion, consolidation, right? Low resistance is what we target. This is what we want to trade, right? And you get the fractal model there. And you also get some sort of continuation as well, right? If I look here. This is a 9 o'clock candle, and it opens up within a key level, right? So again, small wick supporting expansion. The high of the candle also forms that, it's also a reversal sequence, right? Same thing as here, formed from a C2. And you can look to trade that lower, right? So that's just an example from today. I think someone took this, by the way. This is a good catch. Let's get into some more examples, right? So CL. Let's get into these two London reversals. Right, so this is the 2M candle on futures, oil chart. This is the 6M candle, so it's not a London. This is London reversal. This is a New York reversal. Go ahead and look at what formed the low of these candles, right? It's a fractal model, right? So here, this candle, right, confirms the 4-hour low. Now we're aligning the 4-hour small opposing run with the daily and the hourly candle. So see how we're aligning 3 expansion candles in the same direction, right? In this case, this candle here confirms the 4-hour low. Now we're trading the next series of expansion candles into these highs, right? Into these intraday highs, right? This high was formed in the same candle, right? This is what we want to target. Does that make sense? And here's your fractal model, right? C2, reversal into expansion. And you also have your trade here, right? For C3 and C4. Here, here's your C2. Right, you have multiple entries here. A little ugly, but that'll be sometimes. And yeah, pretty simple, right? Confirming the low today with a obviously this key level, which is this swing point low, swing low. Also within this opposing candle, right? So previous day, there's an SMT here. We put in this opposing candle, and we're just right expansion supported by opposing candles here. Let's go into this example on YM. So here's a couple examples of the reversal sequence where we don't actually close a C2, but we just expand. Let me go into this here. So it's going to be this one, where inside of this candle, right, we may hit a lower time frame key level, we may hit a 4-hour key level, but we don't reverse, right, visibly on this closure. But on lower time frame, we may start the reversal, or maybe a lower time frame reversal, right? All that matters is you're trading within a 4-hour expansion candle away from the key level that got hit, right? So what is this really, right? If we look at the previous day, right, large expansion candle, what are we starting to do? I actually traded this as well. We put an SMT up here, right, within this 2 a.m. candle. If I drop lower, right, what do we see? And this is what I mean by this. Look, I'll show you. So this next candle is the open up 6 a.m. candle. But look at the close here. But there's no specific close that we see. Right? There's no reversal candle, but on the lower time frame there is, right? You run out this short-term high, right? And what would this profile be? My ideal profile, right? I'll show you. Where the high of the candle is created from manipulation. Right? So you see that short-term low ran, we go on YM, short-term high ran, we expand away, right? So I didn't even trade this candle, I traded the next one. I actually did trade within this candle actually, but it was this is an aligned version, so let me show you. So this is a TTH fractal model where it's aligned with the 4-hour candle, right? So within here, the same candle. And also, how does this candle form, right? It opens high first, puts in the reversal. Right, CSD. And then what are we going to trade? You know, what time, what times are we going to refer within the 6 a.m. candle? Well, you're going to refer to the 8 o'clock, right? 8 o'clock to 10 o'clock, but more importantly is drivers, right? So here we have 9:30, which is right here. So when you have an assumed high of day, want to see 930 expand away from that. So that's what we see here. And at this point, we're already within a 4-hour expansion candle. So that's already aligned. Now we just want to align the 1 hour and the 30-minute, aligned with that, right? So here, prior to 930, we run out this high, right? So you can already start to look within this candle for continuation. Right? You can put some candle there. Right over here. Right? So you get that continuation. Pretty simple, right? Sorry, my mom was calling me. And then we get a 10 a.m. continuation, right? So all this is expansion, large range previous day. You start to kind of consolidate here, right? Put in some sort of reversal with an SMT up here. We're expanding back in the range, right? That's all that is. I also traded this day as well over here. It's the same type of thing, right? Where the 2 a.m. candle hits this high. And a lot of times you may have an SMT right here, which we do have, which is also a form of the same profile that I just showed. Right. This is also intracandle manipulation. You have to treat an SMT like this as manipulation. Because if I showed you the correlated asset, it actually took out this high, right? So you have to treat it like that. So the high of the day is formed from manipulation. How did this daily candle form, right? It opens high first, right? Session lows to target as well. So you want to trade to this, right? And how to get on side with this expansion, right? We're going to refer to the fractal model, right? So here you have candle 1, candle 2, candle 3, and candle 4, right? You have time drivers within this. So let's say it was a little ugly, but here's 830, right? And like I said, if you have an assumed high of the day, when the drivers expand away from that, that is a confirmation, right? This is one of the most repeatable things, like drivers, um, the way you confirm high of days, low of days, pairing them with entries, pairing them with reversals, right? Is one of the most consistent things you're going to see in the market. If you see here, you can even look on the 3 minutes a bit cleaner with this opposing candle, right? So you can take that, pair this driver with a trade, right? Here's 2R right there. Um, and for continuation, definitely a bit ugly, but 930 makes an opposing run up, and you get your close through right there, right? And you're already aligned with that small opposing run on the 4 hour, right? And the daily time frame, and targeting these session lows, right? So how does 6 a.m. close? Right? A obviously a strong closure, right? And we also create a CST, right? So what can we expect 10 a.m. to do? Right? Expand, right? Into these fair swings. That's what I was really eyeing here. So very clean there. Get into some more examples. HG. So this is an example of aligning a lower time frame model with a higher time frame expansion candle. So here we're on the daily chart, and here we take out all these lows. So when are we likely to get expansion away from these key levels, right? On the new candle opens. So here, for the previous week, take out this low. When is it likely to expand, right? That next week. What about from this fair value gap or from this swing low, right? The new month open, right? So see how we expand away from this monthly low, right? On the new monthly candle, we reverse off this candle's low. So it's actually fractal, right? So why was price waiting to expand, right? Once we form the swing low, why is it waiting to expand, right? We get this phase of price here back to the range. Well, it's because, right, this candle here is already exhausted, right? So that new phase of price of expansion, retracement, expansion will happen the next, right? That next candle, right? That's kind of what my model is based around, right? Just these new phases of price opening on or happening on new candle opens. Um, so this is an example there of higher time frame stuff. Now let's go on to some more examples. This is a trade that I took on CPI, I believe, like last week or something. So we had this high in the market. We also had the previous day closure, right? Reversal candle. And we just had these like failure swings up here and also these failure swings. So I typically want to trade towards those, right? And right, if I'm going to trade towards like these highs up here, right? I want to get in before we take out any major highs. So I want to get in before we take out these highs, right? So here, where's the daily candle? Open. It's right here. So how does this candle form? Right, opens low first, right? Pairing the low of the day with what? SMT. So again, this is the same profile, intra candle manipulation, where the low of the candle is formed from manipulation. If I show you gold here, right? This is the manipulation on the 4-hour or the 1-hour chart. All right, so now we can expect the wick to form, right? And expect distribution, right? And we're always going to pair this, right? This manipulation, if I show you here, this is New York reversal with a driver. So here's 830. That's what we're doing here, right? 830 manipulation. How to confirm this 6 a.m. candle low with the fractal model, right? We have a candle 2 closure here. So we can expect the next, let me just draw this up for you guys. The next series of candles to expand. So this is a trade that I took into this high, right? Right, so pretty simple, right? So that's that. And then we'll get into a couple more examples. All right, this is some stuff last week. So how to trade a large wick. So if I show you this here, right? Oh, this is not actually a large wick. I'm thinking of this day here, by the way, actually. I'll go over both of these days, right? So first we'll go over this one. This is a classic um, London reversal, right? Again, the low of the candle. There's no specific close, but that doesn't mean we can't trade away from it, right? Because we're in a side of a key level, right? Where we'd want to see reversal because all this is, right, is a range low to high, fair value gap. And it's really what gives us away is price signatures, right? You have these equal highs, right? And just a slow move back in the range, which is a retracement signature. A retracement signature is a continuation signature, meaning after we retrace, we expand, right? So here we have a CSD. Let me just erase this. So I'm trading within the 10 AM candle, right? What do we have? A swing point formed in the market, just like the fractal model. This is a strong close in candle 3, so we expect candle 4 to expand, right? But simply put, right, 2 a.m. reversal, 6 a.m., 10 a.m. continuation, right? So what forms a low of 10 a.m. candle, right? A fractal model. And one thing to note here is how I think we had news here. I don't have my news indicator. I think we might have a 8:30 news. I don't remember. We definitely had obviously 9 o'clock, 9:30 news. And what that did, it failed to really continue lower, right? So what does that mean? That really supports our idea of continuation, right? Because if the red folders can't actually reverse price, then that just means we're going to continue, right? We're already bullish, so right, the fact that we made an opposing run to the draw and a close through, that's confirmation. That's pairing a driver with basically either with entry or just confirming a bias, right? That just really confirms narrative for me. So all this is, you get a close through here. I believe I took this on a 30-minute, actually. Yeah, I took this on 30-minute. It's a bit ugly, but here's the CSD over here, by the way, right? We already have that aligned. Here's the first 30 minutes of the 10 AM candle. It opens low into some lows. There's also some minor SMT here as well. We're going to look inside of this candle. Do we have a candle to CSD? Yes, we do. All I need to see is this. Right, so that's my entry. Put my stop loss below there. It does get a bit uglier. We eventually draw. This whole day was kind of ugly, but eventually draw into this high, right? Right, so you see how we went from here, we have this small wick on the daily chart. So that does support it. And then we're just trading, right, small wicks on the 4-hour chart. confirming the wick with a fractal model, and then we're just trading series of expansion candles to do this objective, right? So that's really it. We'll go over this previous day too. This is a bit weird one where like Asia's the low today. Um, but what we do here, so maybe a bit advanced or something, but you create a swing point, right? And when you create a swing point from a key level, right, it's almost like if this key level is going to form, it's going to expand, right? And what we see here is candle 3 doesn't expand, so it's like candle 4 is like forced to expand, right? I've talked about this a couple times before, but I'm going to revert to drivers within this candle, right, to expand away from what? The assumed low day. So when the drivers expand away from that, that's adding to my narrative, right? That this is the low of the day. And by the way, this is a very large opposing run. You see that? And notice how we close back above or close to the daily open, right? So if I show you here, we go back to open and low close. This is more so this candle here. We open low first, right? And we have to adjust our targets. So what am I targeting here? If I show you Asia highs. So this is the 1800 candle, right? The first hour of the day, and we instantly open low. We create the low today early on in the day so that we can expand back into the highs, right? Because there's obviously enough time in the day to expand to this high, but we don't expect price to expand past it, right? We just target it. So that's very important to recognize. Um, Here, I believe I just took the 15-minute model. Yeah. So the low of this candle, or it's really not, it's just continuation. So not really something that's in my course. This is just more discretion thing. I'm just trading the 15-minute fractal model aligned with the 4-hour time frame. So it's really the same thing, but yeah, so what we see here is 9:30 expanding away from the here from the low of the day. Right, we're also forming an ideal swing formation. Right, so I'm just trading the next candles to this high in the 1-minute chart. Right, so pretty simple there. And I wouldn't be expecting a 10 a.m. continuation in this case. Why? Because we already took an objective and the daily candle does not support it. Right? If you see the 10 a.m. candle, it doesn't really do much and we close back within the range. Right? So that's really it. Um, did I trade this day as well? Trying to just find any other examples that I took. I don't think so. I don't think I took this. Oh no, it's too late in the day. What the heck? Yeah, I didn't take that. Anyways, let's get into one more example. Let me show you guys one more example here. So I also took this one. The name open right here. Let's show the hourly chart. We have that intracandle manipulation. Or the ideal profile that I like to use, right? We have the previous sessions do nothing. It just kind of consolidates. Now, why am I even longing here? Right, Monday opens low, right? Very large range. So I'm not expecting a continuation after a huge, large range. And as well as, um, right, we have no wick in the weekly open. So generally I want to trade back to that. And so here we have the previous two sessions consolidating. So when we run that out at a key time, so 9:30, then that adds narrative, right? 9:30 manipulation, 10 o'clock expansion. And what forms the low of the day? Or what forms the low of the 6M candle? It is a fractal model, right? So this is an example of price opening up within a fractal model. Let's go back to that. It is continuation, right? This is when 10 a.m., right? Previous candle already reversed. The next candle just continues, right? Open it within a fractal model. So we see right here. And here's my entry right here. Right, so 9:30, pair that manipulation, be close through it. That adds a narrative to higher prices. And then this next candle, this 10 a.m. candle, opens low first. I get a closer above. That's my entry to take it to this high and somewhere up here. I forgot where ITB, but it was like 3R. But yeah, pretty simple process there. But that's really all I do, guys. Any questions now? Let me get to it. Y'all can start pinging me here. If there's no 4-hour fair value gap or order block, short-term low, can we look for a PY on there? Yes. So I'm framing highs and lows of the day on hourly and 4-hour timeframes. And if it's an hourly POI, you're simply trading a 4-hour expansion candle away from that low of the day. I usually trade gold using 4-hour 15-minute on my personal account. I'm not sure if you use any futures prop firms, but if you do, turn to trading. Oh, I just closed the trade. Yeah. So like Top Step, you can't hold overnight. So I simply just have to close the trade. But I'm usually out of my position by then. Let's get into any. Are you showing a chart or just WAP? So we went over WAP and the charts. Unless you guys are talking. And maybe that was later. Maybe my screen was like frozen. But yeah, if you got any questions, and let me know. I can try to revert to some other examples here that I took. Some really clean examples on YM. A while back. I can remember. After all this chop. It was like over here. Here's an example of a large wick, right? And the profile here is just giving me bias, right? Because we open low first, we get our ideal profile that I'm gonna show you. And I'm just TPing at the previous day's high or at the current day high. So right here with fair value gap. So Asia session does nothing. It just consolidates, right? What does London do? Right? It manipulates into this fair value gap. And what does it close like, right? It closes an expansion candle. So we revert to a reversal off this candle's low. So that just means that since this candle is a reversal into expansion, right? See that small wick? This just means that you can trade within this candle if you wanted to, right? Or you could trade 10 AM continuation, up to you. So if I go to the lower time frames, the low of the day is formed from, right, a sweep. If I show you YM here, or RTY, the quarterly asset, we actually take out this low, right? So that is the low of the day formed from a manipulation, right? Also paired with a driver. So if I show you 8:30 news, this is 8:30 news, makes an opposing run to the draw, then it's manipulating, and then if 8:30 manipulates, what should 9:30 do, right? Expand. So that's what it does right here, right? What is the low of the 6 AM candle formed from? A panel 2 close, right? Fractal model. Pretty simple, right? And then here, you want to wait for 9:30 to pass, which is right here. Here is the reversal here. So that reversal is actually confirmed inside of candle 3. So you can take this entry like right away. And this is all 9:30 also creates that PST as well. So you have multiple entries here. You can take this one as well. Right? After we take out the short-term low. So 10 AM opens lower first. You can use this as an invalidation point where you'd want to see the 10 AM low created from. Then we run out the short-term low, create a nice opposing candle. Yeah, you can take that. That's what I traded there. Even the previous day had another model. If you just look at the chart over here, right? This candle here manipulates this low. Now this is a Monday, but what do we see with this closure? First off, we form a swing point, but we have a larger wick to the downside. So if you actually look in the lower time frame, all this really is expansion, retracement, expansion. That's kind of how I'm viewing it. And this wick right here is the expansion on a lower time frame. You see this expansion away from the key level, you get your confirmation. So inside of that wick, you have a CSD. So you can look for continuations within here, right? And here's the same profile, the ideal profile, where the previous 2 sessions consolidate, right? We run out the short-term low, pair that with a driver, so 9:30. 9:30 runs out this low, and then 10 AM continuation, right? So this is again, 10 AM is opening up within a fractal model, just expand away. So there's another two examples. Here's another, even this day here, right, with just this huge series of expansion candles. And this Monday high of the week right here, you can look to trade back into the range, and you can see that the way this candle forms um, supports a bullish day, right? Because it opens low first, doesn't create a wick, but opens low first. Where's my daily open at right here? Right. So again, we're not going to trade the London reversal here. Why? Because it's not an expansion candle. We're simply going to revert to the next candle. Right. How did 2 a.m. candle close? It's a expansion candle. So ideally, we sweep out this low. Right. What is a low formed from? A fractal model. You see that? Also, what is it? Also, it's a ideal profile, right? The low of the candle manipulation. Is there an SMT? Yes. So the 6 a.m. candle low is not taken on RTY. The low over here is taken, right? You pair that as well. And you can trade candle 3, so 8 o'clock, 9:30, the 9 o'clock candle with 9:30. You can also trade that. So if 6 a.m. candle reverses, New York reversal, what will 10 a.m. do? Expand, right? So hopefully it's starting to make sense. So with this being kind of a large wick in a way, if I show you on the daily time frame, it's not insane. And it's really hard to give you a specific, I can't give you a specific amount of points or anything like that. But this is the general rule. This is why we made this rule. Is if you think it's a large wick, right? Then this is how it needs to happen, right? We need to open low first. So you're going to revert to this here. Where is it? Wick size. You're going to revert to this. Just follow this protocol, right? It's exactly what we see here. We open low first, create a manipulation, like literally like this, right? We run out short-term low, pair that with an SMT, right? And then you can trade obviously our reversal sequence with the fractal model. Yeah, let me see if I have any questions. You trust the correlation between YM and RTY quite a bit. Yeah, I do. They look, uh, they don't look. Yeah, they're really not as correlated, but it's more. I think YM is more correlated than RTY than YM is correlated to like NQ and ES. So that's kind of like your only option there. But when assets are not correlated, so this can happen, right? Where two assets are kind of fighting against each other, then you can't even use SMT because there is no Kraken correlation because at that time there is no correlation. So you generally want to avoid trading those days. What are your thoughts and why? Yeah, it's just the closest in correlation. So if I show you here, let's show like the daily chart here with R2A, it's like pretty close. Like you see we fall off here, right? Same thing. It's pretty close, right? And you see the reversal was actually created from an SMT up here. So we took out this high on YM. We failed to do so on RTY. So it's pretty correlated, actually, in my opinion. But what if sometimes you trade inside the 4-hour 2 p.m. candle? I don't really trade PM. It's very specific. Like I took like one trade last week. It's all it comes down to is there an objective still open? Really, all it comes down to. But yeah, normally the move is already done by PM session. Do you not use daily bias for previous day close? No, I do. So everything like bias wise, you can all get that from the fractal model. So I'm still trading the fractal model, but this is how I trade the fractal model, right? I align multiple expansion candles in the same direction. That's how I confirm like 4 candles highs and lows and all that. Have you tried the fractal model with 7-hour? I haven't. Have not. But the way I use the way I profile the 4-hour candle is, somewhat similar to the 7-hour chart. I'll go over an example of this trade that I took on HG. I wanted these lows to get taken, but we didn't quite get there. But I believe I traded within this candle here. Okay, so this would be an example of aligned, where I'm aligned with the 4-hour expansion candle. We get this ideal swing formation. You get this closure here. Right, that's what I took. And then I could have partialed here, but I wanted to hold that. And then it came back. It was unfortunate. But yeah, it was still a good trade though, still valid. It's just like chopped around for the rest of the day, I'm guessing. Yeah. Like when you see this, like when you see these deep pullbacks and right when you take it a low, we reject back up, it's just like not a day. You don't really want to be chasing price because already showing you the willingness that it's not really heavy. Price is not very heavy. If the daily and 4-hour line up, but you don't have a fractal set up for the high and low, do you just wait for a sweep? Yeah, you just wait for a fractal model. But most of the time, you do open up within a fractal model usually. Let me show you my trade on Friday, last Friday. What was it? It was here. It was here. Is that right? Yeah, yeah, yeah. Right, so we reverse off of this candle's high. Let me show you how this daily candle formed, right? So I'm getting biased multiple ways. For one, daily closures. Here, I can't revert to a daily close, right? There's other ways, right? There's the way the candle actually forms. So if you see the way this candle forms, right, so this is like this. So if I show you lessons, open outlet close, a bearish candle, right, opens high first. Right, that's what you see here. So we open up the candle high first, right? So that's one way I'm getting it. And the second way, when I open up the charts at like 8 a.m., I already see that we reversed. Like, we already have this confirmation. Um, so I'm just looking for continuation, right? Into like session lows and like you see all these failure swings here. That's what I like to see. All these failure swings, and then beyond that too, like these failure swings. It's really these zones like in close proximity, right? Which is the previous day's low. If I look here on the 30-minute chart, then I'm getting even more confirmation that we're continuing away from this CSD. So what is this? The ideal swing formation. So where's 6 a.m. candle open? It's right here. The high of the 6 a.m. candle is formed from a fractal model. So this would be classified under reversal if I show you. It's just the 4-hour candle is reversing from a fractal model, right? So it doesn't have to be a reversal into expansion candle. It can also be we should probably add that, I'm not gonna lie to you. For expansion candle, like this is just a continuation candle, right? But the high is confirmed by a fractal model. This is what I traded. Right, you get your ideal swing formation there. Just delete all this stuff. And with this closure, like I'm not assuming price comes back up here, right? Because this little pullback is already like well positioned in this range, right? I wouldn't want to see like after this really strong close, I'm not trying to see price come all the way back up here, deeper in the range, sweep out the high. It's not necessary, right? You already have the wick formed there. The way this candle also formed, right? Opens high first, and then we're getting the closure. So this is on all time frames, right? Which is how we want to see candles form. So that's what I took there. We got a really nice reaction, and I TP'd at the previous day's low. all these failure swings, or somewhere around there. But yeah, so it's like the same process like every single time. I also took take what's something I took last week. I'm trying to remember for you guys. No, I didn't trade YM much last week. Oh, I took. Oh yeah, took something over in here. I think I took an ES. I don't ES, I think it's an ES. Yeah, yeah, yeah. All right. So why did I take this previous day? Right, manipulation. So I'm getting my bias from closures, but I'm also confirming. Right, you don't just get bias from closures. Like obviously you get the idea. You still need the confirmation via profiles. So I'm like really relying on profiles here. So here, this is the daily open. And you see this move here. I'm not really concerned with this move, right? Because it doesn't really hit anything relevant, right? These would be the relevant highs that we're looking for to trade into. We don't hit those, right? There's no reason to reverse from failure swings, so I'm not really concerned with that. It's also an irrelevant time. It's like Asia session, so we see the 2M 4-hour candle that we make a low, right? So with this long wick, right, no closure. So again, this is why I added this in the course. Like, where is it at? Reversals. This would be the low of the day. Whoops, I gotta go to notes. Sorry. The low days look something like this, right? Where there's no specific closure in the 4-hour candle, right? But I'm just going to revert to drivers within this, right? So how to confirm again? I've said this many times, but how to confirm a low of day if it's before a driver, right? We want to see the drivers expand away. That's what both drivers do. I'm telling you, it's like very repeatable. So here's 830 red folder. It expands away from the draw. We also take out this low. So at this point, I already have a 4-hour expansion candle aligned. You see that? I already have that aligned. So you can look for trades in here. It just gets a little ugly. Like there's obviously nothing to take here. And I'm gonna wait for 930 as well. So I actually took this entry right here. I took that. I sent that out. And you also have this, right? Where the 10 a.m. candle opens within a fractal model. Right, just continuation trading away from the low. Sorry for that. So here we open up, we go higher first a little bit, and you come lower into this opposing candle, so key level. Then you get your intra-candle CSD. Let this dog out before he starts crying. All right, but yeah, I took this trade. There's also this one, right? Because we form a swing point here, right? We open up the candle, the new candle, right? Create an ideal swing formation, intra-candle CSD, and that's 2R already right there. But yeah, there's multiple entries that day as well. And yeah, hold on, where am I on to? Can you show examples of the 4-hour and daily candles to avoid trading? Um, yeah, so like something to avoid would be um really like even today, bro. Like I wouldn't even trade today. Um, Mainly because of this just large opposing run. I look at like it's kind of weird this day, honestly, because this deep run in the range is not something I like to see for even a continuation, right? But here's the daily open. We open high first, we open low. We get a 10 a.m. reversal. Is there even a model there? Let's see. Maybe I missed this, but I wasn't really concerned with this, honestly. Wasn't really looking. I was also on a call with the. Let's see. We would need a close above here. So like, I guess that is a valid entry, right? So maybe I missed that. But I was kind of busy today. But I didn't really like today. I wouldn't really call this like an A plus thing, but yeah, it worked out. But that's really the model right there, right? I just don't like the intraday pro like framework, to be honest with you. I don't know if anyone took this. I like longs. Like I definitely like longs overall, but yeah, it just it wasn't that great to me. And here's the same thing. Like, look, so 10 a.m. This is when you maybe could actually trade the freaking the 1400 candle, which is actually very rare. But what we see here is 10 a.m. reversal, so New York reversal. At this point, like we're already close to these highs, so you can expect the 1400 candle to expand. And you see what we did prior to the 1400 open, right? We form a reversal, and it's opening up within a C2. So here is a continuation model. So let me go back. Lessons. Um, so the first one, 10 a.m. would be, oh, sorry, this is 1400. We open up within a fractal model. Okay, you see that? Let me mark out the 10 a.m. open and the 4-hour open. Right, so here's the 10 a.m. reversal. Here's the continuation, right? And here's the reversal. Go back. Reversal. Right, the low of the candle is created from a fractal model, which is what we see right here. Right, so maybe there's trades there. There's really no way to get in here. That's just too large. Maybe it's like a 30-minute model? No, I don't think so. So yeah, there's just a 10 a.m. opportunity there. But I just didn't take it. Oh, after I like saw basically, I think it was when was it? There was an opportunity here on like YM and stuff, and on NQ. There was like opportunities for sells even if it didn't reach this low. But that's what I was kind of targeting. Just being honest, I was targeting this low. And once I saw the 10 a.m. candle, it's kind of whack, right? We didn't get speed to this low, so it's really not concerned. But some things to avoid is when either like 6 a.m. candle is like a very large range, then I can't really expect 10 a.m. candle to be, um, a very large range. So let me try to show you an example. So like something like this, maybe you target this low. See this huge range candle here? Like this is typically like where the daily candle is already like kind of exhausted, right? So if I show the hourly chart, it's already printed a huge range. So I'm not even that interested, right? And here we look what we get. We get a reversal. Okay? A new phase of price after we take out this relevant low, we just reverse, right? And this is an example of 10 a.m. opening up within a fractal model. You see that works there, right? So I even saw this day, but I was not interested in trading back to the open here, to be honest, just because this huge wick. It just wasn't interesting to me. I did trade this day, however. Um, this is really what you want to see for a 10 a.m. candle. So in New York reversal, you ideally don't want it to expand, right? Because you basically want to catch the majority of the daily range. So at this point, we kind of have that large wick on the daily chart, but what is the high of day formed from, right? It's early on in the day. And the low of the day was formed before 10 a.m. So I can expect 10 a.m. continuation towards the high of the day or objectives around the daily open. So this is what I traded here. Um, so this is really what you want to see. Some things on the daily chart to avoid would be days after large ranges. So it's the same thing. Like if you look at the expansion model courses, where it's like 3 days of consecutive expansion, it's really like that. Even on like the 4-hour time frame, if you see 3 consecutive expansion candles, like you're not likely to get continuation. You can see it right here. Like we have high of day, 1800. I would never look for a continuation in New York, right? The daily range is already, exhausted, right? It would actually make more sense to come back in the range, but um, those are just some things to avoid. If I show you why I even sold silver last Friday, it was because of that logic. So here, so I saw gold, right? What do we see here, right? A very large range, series of expansion candles. So within this 6 a.m. candle, we have 8:30 red folder news, right? So when are we likely to come back to the range, right? Red folder. So this is why I actually sold gold on Friday, right? So we have an ideal profile where the high of the day is formed from manipulation, also paired with an SMT. The high of this candle formed from a fractal model. I show you, or so we open up within a fractal model right here. All right, so I'm just trading this next candle right here lower. So I actually got in prior to news event. We just expanded to the previous low. This is a crazy range day. It was like actually wild. Um, but yeah, it's all the same stuff. Everything I'm taking. What's another thing here? So like here's a really good example. Like here, again, I wouldn't be looking for a continuation lower, right? Because the daily range is already, printed, bro. Like, look at this. It's already a fat wick, so I don't expect a large range day to these lows or anything. So I don't expect 10 a.m. to continue, right? Doesn't really make sense. And you see, we kind of just chop around. Um, and also, you know, let's say prior to your session or something, we take out objectives. Again, I'm not really interested because I want to be targeting these objectives, right? Like I said, on the 1 hour and 4 hour time frame. Where is it at? So if we go to targets, this is important to me. Like stuff like this, right? I want to get in prior to taking out these draws, even though this is my draw on liquidity, right? I'm not looking to trade after we take out these highs, right? I would rather wait for another key level to get hit and a 4 hour candle to align itself again. Just start the process over again. So here we retrace, right? Run out the short-term low within this range. I want to get in before we take out this high, right? And I want to get in right before we take out this high and partial here, right? Partial to these areas to basically, trail my position and take my final TP at this high, So that's what I'm really looking for. Be right back. Sorry, my dog's freaking out, bro. What is your success rate? So my success rate is like high 60s, low 70s, generally. I aim for like I so it depends how many contracts going with, but um I generally TP at like 2R, but I like to TP around structural targets. Like if you look at today, I kind of got greedy, but I was actually pretty confident in this low getting taken. Not gonna lie, just didn't get taken. So like I let go. Like where was it? Oh, I'm on replay mode. Sorry. So I kind of let a lot of R go, but I was holding to this low, this structural TP here. Like I could have TP'd right here, but honestly, like looks like a feather swing to me. So where's my trade at? Somewhere around here. Yeah, I let go like a 2 point something R trade back to my break even, which happens. You don't use 15-minute swings anymore? Yeah, I kind of don't really use 15-minute. Now I will release a scalping model, which is it's really the same thing. It's when I'll just find an example for you real quick. Let's find a fractal model. So essentially, where the low here's one right here. It's literally the same sequence. So you see, this is an expansion candle on the hourly time frame right here. You see this? The high of the candle is a fractal model, or we just open up within a fractal model. You see, I'm just aligning a lower time frame model with a higher time frame expansion candle. That's literally all my. That's my. I'm just aligning expansion candles and having a lower time frame model supported by a higher time frame expansion candle. Really, that's it. If I try to find another example for you. Oh yeah, here's one. Right, new hourly opens like right here, and it's opening up within a swing formation, right? A valid three swing formation. So you just expect that next candle to expand really. But I'll probably ask T if we can add like an advanced section at some point. Probably add that in there or something. There's some stuff that we could probably add or whatnot. We'll make adjustments. But yeah, it's very specific to for when I actually trade the 15-minute. Yes, it's recorded. I'm not sure if this will be under the course or what. But if those are all the questions, guys, probably wrap it up here. Can you with respect to the 0.5 the data can. So yeah, like the 0.5 EQs of like candles and stuff like that, it's all the same as a fractal model. For scalping max time frame. Well, it's not really. It's like 1 hour key levels, really. So if you wanted to use the 1 hour time frame, yeah, maybe there might be an example here. Maybe that's an SMT. Okay, yeah, look. So look here. If you want to use the 50-minute or something, right? You want to trade within 1 hour expansion candle. So you see this here. You don't want to trade within this candle because the 1 hour is not aligned. So you want to wait for that next hourly open, and then what are you opening up within? A fractal model with SMT to high. So you want to trade that next open, high, low, close, right? 50-minute candle, pretty much. Right? Does that make sense, kind of? So it's literally the same thing, but fractal. Which this was the trade this morning, by the way, on NQ or not on RTY or YM. Either one. Like this trade right here was the trade, but I was not on the charts this time. Like this right here, with the ideal swing formation, little 2R right there. I think that gets hit. Yeah. Yeah, that was a trade this morning. And even this right here, if you want to take this too. So definitely some opportunities today. And that 10 a.m. reversal, didn't expect to be real. But there was a trade there too. Yeah. Took the soup. Oh, fire. Was this oh nice. Oh, I'll show you RTY, bro. I was on a call with T, so he missed this. This is so clean, man. So look at all this low resistance here. You take out the relevant swing. So essentially this is the model, right? Order pairing ranges. If I show you in the WAP within targets, right? Taking out a range low, right? Targeting the range high. In this case, an RB, we're taking a range high and targeting the range low, right? So here's the range high. Here's all these various swings, right? All these various swings that you can target. And then how did this candle form? It opens high first, right? So that's something you want to trade. And when do we actually expand away, right? It's waiting for that next candle open, right? This candle is in support reversal, trade the next one. Simple as that. Then you have this objective here, right? What do we open within? Fractal model. So really, this is just a fractal model, but it's kind of like giving you a what's the word here? A filter. Like you should know exactly when and where it's around these candle opens. Um, right here's like these little fair swing lows. This is so clean. Where's the trade at? So I'll show you. Right, so that's the trade pretty much right there. Here's the key level, fair value gap. So that was like really clean. I think some people took that. Really clean draw. Like this is pretty freaking clean, dude. Pretty A plus as far as like this profile goes. Now the higher time frame is probably a mess. Pretty much a mess. I mean, not really much to see there. Really, all we have is like this relevant swing, low to high, and you have internal stuff. So obviously, this is the relevant swing. This is a relevant swing. But when you take out relevant swing, you're going to get a reaction usually. Yeah, that was pretty clean. The daily candles reported bear since too. Price confirmation. Yes. All right, guys. So I'll probably wrap it up there. I think I showed enough examples. Just walk the course. So yeah. Yes, sir. Y'all have a good one.